So let's talk about one of everybody's favorite companies, a meme stock classic, that of course being GameStop. As many of you are aware, GameStop is currently in the process of trying to acquire eBay, a company that is 4 times its size, for $56 billion. This, of course, coming from a 50-50 split, at least how the CEO describes it, a 50-50 split of both cash and stock. Today, I'm of course going to talk about why this is so fascinating and interesting to watch go down, kind of how we got here, where this acquisition is supposed to take GameStop, and objectively whether or not I think it's a good idea and where it'll end up. So, without further ado, let's get into today's video. So obviously, as I mentioned, GameStop is significantly smaller than eBay. This means there is not a scenario at all where GameStop is able to acquire eBay without taking on significant debt. Now, their CEO, Cohen, actually went on a CNBC interview and kind of outlined how he was going to go about this. And let's just say it left a lot to be desired.
What happens? Um,
Basically, at least my perception from this, and a lot of people watching this go down, it was a little bit painful to watch. See, we seemed to not be able to add up numbers, and we kept kind of coming up with question marks as to where the rest of the money was supposed to come from. And now there's a lot of what people speculate as to where it will really come from, and then there's how the CEO put it. And that was when he said, oh, well, it's a 50-50 stock and cash acquisition, which would basically signify that they intend to issue a significant quantity of shares to pick up the rest of that. Now, anyone with a fully functioning frontal lobe would think about this and go, hold on a second, that doesn't exactly sound good. Why would I want all of my existing shares of GameStop to be heavily diluted? And you would be raising completely valid points, right? This isn't something that would get really any shareholder approval, and most people wouldn't be fond of this at all, just to suddenly find out that all of your shares you'd been holding on to of GameStop are now worth significantly less. Nobody likes that idea. Now, that's just what he said in an interview. He could have been put on the spot. It was a really objectively painful interview to watch. There was a lot of pauses in it and just really awkward silence on the interview. So maybe it was just like heat of the moment or a miscommunication that kind of led to that. A lot of people are speculating that really where the rest of the money would come into play, because they only have 9 billion on their balance sheet, they have a 20 billion note, and then the rest was like the entire market cap of GameStop and shares, right? So more people are speculating that the excess funds that would come in, about the 16 billion or so that would be needed to buy the eBay shares at the 20% premium that was proposed, would come in through either sovereign wealth funds or other lenders, but basically, point being, more debt. Now, one of the things that would kind of put me on pause if I were a shareholder of GameStop, I'll just come out to the front and say it, I don't personally hold GameStop. I know it had its big run up amongst the stonk mania, and we got some movies out of it, and we got some wild times and some memes, but for me, it kind of goes against what I try and focus on, that being long term wealth accumulation, right? GameStop has always fit into the meme stock crowd, and this can really be shown by the decisions of its exec board, at least when they've tried to come up with new proposals on how to fix GameStop as a whole. Now, we've seen some success since 2023 when their CEO took over, and this was primarily because they pivoted and started shutting down a lot of their brick and mortar locations, which obviously made things a lot cheaper for them to operate. And then they also started focusing on more what we would consider high margin products for them. So they've put an emphasis on nostalgia products with their retro systems and games and all of that nature. And then they also did a pretty smart pivot into also focusing more on the collectibles and card portion, which had been a portion that GameStop had in their stores, but it really became a big emphasis because that was where the margins were. And they've seen moderate success at this turnaround. But that doesn't stop us from going back just a few years ago and seeing some of the really interesting ways that they try to appease shareholders. So I've already covered on this channel a couple of those ways that GameStop has gone about trying to do this, but let's just hit the highlights. First, there was the NFT marketplace that kind of happened towards the end of the NFT cycle. Then, based on the NFT marketplace they had that had, well, very low volume, as most NFTs have kind of imploded at this point, there was the ideas for the proposed Fortnite ripoff that you would be able to use your NFTs in. This one for me was one that was just a major head scratch, and I had no idea where they were trying to go with this. And at the time, I criticized that a lot, and then I later brought that up in a further video. And then the most recent pivot in GameStop that we have seen to really try and, well, fix the company has been, of course, a pivot into a Bitcoin treasury company as well, where they made that announcement way past when all the other companies started transitioning. So typically, I summarize GameStop's actions as both late to the booms, but also focused on mania, which I don't personally buy as a long term sustainable plan. I do like that they at least are putting up a fight, but this move, it kind of doesn't really make sense for their model. Now, let's talk about the ideas behind the potential eBay acquisition. Well, for starters, there is some overlap currently between the GameStop model and the eBay model. That, of course, being there's a big emphasis on eBay for collectibles and things of that nature, and they can kind of flesh out the trading cards, and that makes sense. But there's also a lot of other stuff on eBay that I'm not exactly sure I'd feel competent with the GameStop management running. They haven't really done a great job with their small business they have right now, and now they want to try and take on significantly more uh, expertise in areas they, well, don't have, and they want to take on more responsibilities for a much larger company than their own. And I'm just not buying it, as even if this acquisition, which at this point I don't think that many people actually think will come true, but if this acquisition were to fully be facilitated and GameStop now owns eBay, I'm not sure they'd actually know how to run the other portions of eBay's business well. And the emphasis from GameStop is that they want to make eBay a true competitor to Amazon. However, a lot of shareholders and financial analysts and companies alike are all putting out statements with their opinions on this, and it's safe to say the public perception of this isn't great. They think eBay is doing just fine right now. eBay fundamentally is doing pretty well. And it's because they aren't trying to be a major competitor to Amazon. They've kind of carved out their niches where they can truly succeed, and they're exceeding in them. And a lot of people like this, and they don't want eBay to try and compete and lose with Amazon. They want eBay to continue doing what they're doing at a high level of success. Now, let's talk about what might be incentivizing this potential acquisition. You see, one of the interesting things is that Cohen is set to make an additional $35 billion dollars if he can somehow raise the GameStop market cap to $100 billion. dollars. Now, I know what you guys are thinking. Obviously, if GameStop shares appreciate and its market cap becomes $100 billion, dollars, that's incredible for shareholders. And my thoughts are yes, it would be incredible in the short run. However, I don't think this move is a long term move that would generate success. This seems more like a potential to try and make the GameStop appreciate in market cap significantly in the short run, but I'm worried about the long term prospects of that. Now, additionally, we had some professional investors such as Michael Burry who were holding GameStop shares, and after this announcement, they kind of pulled their money out, and it's pretty safe to say why. See, the thesis on GameStop for a long time was that they didn't have a considerable amount of debt and they had some assets on their balance sheet. And now they're proposing to take on a significant quantity of debt for a reward that may pay off, but honestly, I don't know how much you trust the current management to run eBay well. And that's kind of the driving force of seeing a lot of big name investors publicly pull out is they don't think GameStop can run the Berkshire Hathaway method. Now, at least for me, I don't mind if GameStop were to try and do a similar strategy to Berkshire Hathaway. It's just that their selection doesn't necessarily make sense to me, right? If they have a $9 billion cash position and they're looking for ways to put that to use, there are a lot of companies in the small cap to micro cap space that are actual name value companies where it would be pretty good to acquire them. There are some good studios, there are some good hardware companies. Heck, I've even brought some up on my microcap mania that I think would fit in GameStop's brand significantly better than trying to acquire and run eBay when, again, they haven't really ran GameStop well. Now, they've definitely improved it from something that we thought was going to die pretty fast to, hey, it still has legs and it still even like can find ways to make offers to eBay, but I'm not necessarily sure that this is the right direction for them. And one of the things I've kind of noticed is that a lot of the executive board for GameStop is older. Now, I'm not trying to say anything like, oh, old people shouldn't be running companies. I think there's a lot of expertise that can come with that. But for me, when we go to all of GameStop's failed attempts at really trying to save their business, it's again kind of because they aren't focusing on their core business and what made them succeed in the first place. I think there are a lot of great ways, again, they could go into looking for more smaller companies in the gaming space that they could actually feasibly acquire without taking on significant debt, or there are a lot of other opportunities for them to pursue, even in the collectible space, if they want to truly become masters of that. But I don't see the eBay or the crypto pivot or the NFT marketplace slash NFT Fortnite ripoff as what the customer base of GameStop, or at one point, what was the customer base of GameStop, would truly want out of this company. And so it worries me, and I definitely wouldn't want to hold on to shares of a company where I thought that the CEO and executive board's interests were much more on boosting the actual share price in the short term, opposed to the actual longevity of the company and what gives them a sustainable business. That would be my primary emphasis. Overall, thank you for checking out my video. This has definitely been an interesting thing to keep up with. It's always exciting anytime GameStop pops up in the news because you don't really know what's going to happen. Are they going to be seeing a massive stock rally? Are they going to be trying to acquire a company that is 4 times bigger than them with incredible amounts of debt? Are they going to be doing a complete pivot in 180 and say, you know what? We're now a cryptocurrency company. That's us, GameStop. You never know what to say. But all in all, I really appreciate your time and thank you again for checking out my video.